All right, good afternoon, traders. I wanted to come and make a quick video uh, and break down what I see for UJ. Today is August 11th, and UJ has completed a about 75% retracement and is headed back to the top side. I actually called this trade um, last night when I noticed some movements on the chart. So let me take you back a few days uh, to August 5th, which is NFP Friday. We have this about 200 pip move to the top side on the NFP news. Price hung out up there until, you know, the following week. As we know, NFP is on Friday. So if we look at the chart, we have Monday, Tuesday, and on Wednesday, we got our CPI news, which is inflation news. Uh, we fell short of expectation on inflation, which sent the price reeling back down, to the sell side. Um, so Thursday, we have PPI news, which is basically inflation for businesses. Um, I'm going to take you through the charts and what I saw that made me realize that UJ was going to buy back up today. Okay. It should not be strange to anyone that I'm bullish on UJ at this point. If you look at this chart, I think it's pretty easy to see uh, that UJ has been on a crazy run. Okay. Just for some perspective, I'm going to zoom out. Um, so in the beginning of March, or really since the close of last year, UJ has really been towering to the upside. Okay. I like to use my 9 and 13 moving average when you have powerful trends. It allows us to see, and anticipate, what price is going to do. So I'm going to zoom back in, and my interest really is this last impulse move to the top side, and then this pullback. Okay. So from a technical standpoint, I can pull out my Fibonacci, put it at the lowest point, and let me delete everything I have on the chart so we can start all over. So I can pull out my Fibonacci from the lowest point, take it to the highest point that the market uh, achieved, and that was July 15th. From July 15th, we retraced. Okay, if you notice, the retracement took us to our key golden zone here. It actually pulled back just south of the golden zone. This is the 61.8. So we can call it, somewhere in the 70% mark or mid 60s, maybe 70% mark. Then the market let us know that it was ready to go back to the top side. Okay. We have news events and whatnot, but the technicals uh, generally still play out. Okay. So this is where we are in the market. Uh, so from this point, I'm going to go ahead and delete the fib. I was bullish uh, on the dollar, right? So I thought I was pretty sure that we were going to get a up move and we were going to continue to move out of here. I actually was bullish on the CPI report as well, and that didn't work out. So what happened last night that made me believe that we were going to get this buy move? Okay, so since we're still zoomed out, we're going to pull the Fed back out from its impulse move here. Put the beginning of the fib on the wick of this green candle. We have this impulse move up, right? It was heavily aided by the NFP. Market topped out, and now we have the impulse or the pullback that was heavily aided by the CPI news. So if I look at this impulse move and this pullback, the pullback was very close to this overall pullback. Okay, almost a mirror image. Then today's candle pushed down a little bit further, just shy of the 78.6. 78.6 is a optimal trading entry for a mentor that I follow, ICT. I'm a firm believer in the 78.6 being an optimal trading entry. Whenever I see a 78.6 pullback, I normally jump all over that with 2 feet, especially if the rest of the analysis supports my idea. But that was only confluence from me. I'm going to show you what gave me the hint prior to the action and the news report. So we're going to zoom out to the 15-minute chart, and we're going to look. This is the NFP move. This is the market that hung out. And this is the CPI news, okay? So as a trader, I follow a lot of ICT concepts. I don't know if you guys follow ICT or not, but he teaches a lot on his YouTube mentorship. He's made several videos prior to it. If you have not heard of ICT, he can be a little bit lengthy and drawn out in his videos, but the information that he will provide will likely change the trajectory of your trading life. So if you understand price and liquidity and market structure, then there are several breadcrumbs that the market leaves for you that allow you as a trader to pick to have a bias, right? And a bias that's supported by the price action. What do I mean by that? So after the price pushed up on NFP, right, we broke this high over here, right? Price came down, NFP pushed it past this high. So in a nutshell, if we have price that breaks a level, we expect price to come back, retest this level, right? Maybe come down. If we get a deeper retracement, we can mitigate some of these imbalances, right? When you get this impulse move, notice there's just on the 15-minute chart, there's only a green candle, right? This is unhealthy price action, also known as a fair value gap or an imbalance. If you don't know what that is, maybe I'll do a video to break down fair value gap / imbalances. But there are several videos on YouTube that you can go and find that information with. So we have this fair value gap. We have no mitigation here. So even with a group of guys and gals that I trade with, I believed, and I told them that this, as price pushed down here, I believed that we were going to go and mitigate these imbalances because I expected the CPI news to run us higher, right? So if you noticed, price never pushed down. So that should have been my dead giveaway that the news was going to push the market down to mitigate these imbalances, right? Not only did it mitigate these imbalances, it also ran these lows. When I say run the lows, the low went below these lows, okay? Super important when you start looking at your trade setups. Pay attention to the objectives that are on the chart. So I was caught off guard, even though I knew better, by this news event and the move. Okay. So once this news events and move happened, um, I got with the team that I trade with, and I'm a swing trader. So I told the team, I said, hey, um, I'm going to throw this in reverse so we can talk about this. So I told the team, this is towards the end of the day. If you notice, this is still August 10th. August 11th it starts. This is the start of the new trading day in like Australia time. The Asian session starts. Okay, this is a GMT clock it on the bottom, and I just want to show you because once the market closed on Wednesday, I told the team, I said, hey, we got caught off guard. I will own that, but because the market left us the same situation, except on the flip side. Notice we have this huge candle, and it was only sell action. There, this huge imbalance needs some mitigation. Okay, price is here. Now, what we want to pay attention to is these new lows that were created. Remember, we ran the lows on this side. This down move ran these lows. So, as a trader, you have to understand that there are two objectives here. There's a news event coming out on this following morning. So we kind of have the market cornered. So during the Asian session and the London session, the market has to show itself. And what I mean by show itself is if I take a ruler and place along this range, this is a 291 pip range. Let's call it a 300 pip range. Now, we all know that price really consolidates, hangs out on the Asian session. And then on the London session, what I told my crew was the market has to make a decision whether it's going to run these lows or it has to make a decision whether it's going to mitigate this imbalance. So if the market pushes up and mitigates these imbalance, then I can assume that the news coming out is going to be negative and push the market down again so we can run these lows. But if the market hangs out down here, when the news comes out, it's going to wick past these lows, right? And then go run this imbalance and eventually run these highs that it created. And since I'm bullish on the dollar, I told them that I thought or I was biased for price to hang out down in this region and then make its move. So let's watch. Obviously, wow, I just noticed that my play button is not here. The updated trading view. Okay, so for the purposes of this video, I'm going to jump to the 4 hour and just speed this thing along. So notice that price this is where we were. Price came up. It did not break this high, right? This was the high if it had broke this high, it could have started mitigating this imbalance. Price came up to the high and hung out, right? When the news came out, about right here. Price pushed down. Guess what it did? It ran, yes, you guessed it. It ran these lows. The same lows that I told the team about. So, two things I was able to accomplish with this move. I was able to sell, right? I was able to pick up on these 80 pips or so, 60 pips. That's 68 pips. But more importantly, I had a buy limit trade below these lows, right? And I took the buy for the move back up. Now, obviously, we didn't get one of these momentum candles, that I would have preferred, but nonetheless, the move is in the bag. Okay, so what I expect is for price to come up, right? Price broke this high. We may get a pullback, even if we get a pullback to the 78.6, right? I'm expecting a pullback. Let's call it to this area. We won't break this low. This will give me another entry. But even with this entry that I'm in now, I can take this entry, guys, and I can hold this trade, right? I can hold this trade. I'm a swing trader. I can hold this trade all the way here. This is the negative 28 extension that we talked about, right? This is where the market pushed down. If you're, let me show you another level of confluence. If you're a supply and demand trader, the market came here, it pushed down, right? This zone right here. You notice price pushed up, came right back to that zone. Tapped in. We can expect price to push up to this zone. Smart money says that if price has been there, comes back, taps in, it's going back there, right? But not only is it going to do that, in my opinion, it's going to run all these highs eventually, right? If you remember at the beginning of the video, when I started up, price started here, it came here, it just retraced, guys. It just retraced. Every financial analyst is bullish on the dollar, especially versus the yen. You know the current market conditions. You'll understand why. I don't have to break that down. But we think price can go to 140, 142, right? Price currently sits at 132. So we have $10 or 1,000 pips that we can hang out and ride this trade up to, right? This can be 1,000 pip trade. Now, obviously, it's not going to be one candle that runs us 1,000 pips. This will take place over the next several weeks, maybe even months. But it will also provide some opportunity during the pullbacks to get better entries, to flip accounts, and all that good information. Okay, so hopefully you got some value from this video. I don't want to make this video too long, but I just wanted to show you what gave the market away and what I expect going forward. Maybe you agree. If so, maybe this will provide you an opportunity to trade this back to the upside with me. Thanks for hanging out. Hopefully you guys will have good luck and enjoy your trading.